welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss gold's recent rally, why investors are attracted to it, and the role it can play in portfolio diversification. Gold prices recently surged to record highs, surging above $2,600 per ounce, driven by factors such as economic uncertainty, potential Fed rate cuts, and geopolitical tensions in the Middle East. While gold can serve as a store of value and a hedge against inflation, its performance should be viewed in context with other asset classes like stocks and bonds. It may be surprising to some, but stocks have outperformed gold over the past 2 decades across many different macroeconomic events. That said, there are many reasons that investors are drawn to gold, especially in times of uncertainty. When it comes down to it, investors should consider gold as part of a diversified portfolio strategy rather than a standalone investment. We'll explore this over the next few minutes. First, this chart shows the S&P 500 total returns and gold returns re-indexed to the cycle peak in 2007. This illustrates the role gold can play in balancing risk in times of uncertainty. But as you can see, stocks tend to outperform in other environments. The ideal scenario for gold is when the Fed is loosening policy and during financial and economic crises. Gold performed well immediately following the 2008 financial crisis and again during the pandemic in 2020. It's interesting to note that gold did not perform well during the recent inflationary period since the Fed raised rates rapidly, which favored assets such as cash and short-term bonds. Also, gold doesn't generate portfolio income, making it important to distinguish between the role as a one-off investment or as part of a goal-oriented portfolio. Next, this chart tracks the performance of gold alongside the U.S. 10-year Treasury and German 10-year bond yields. It shows that gold prices tend to move in the opposite direction of interest rates. Gold prices have risen in response to recent Fed rate cuts and have performed well compared to other defensive assets like short-term bonds. That said, interest rates have actually risen recently, with the 10-year Treasury yield jumping over 4%. While gold is near all-time highs, stocks and bonds can benefit from falling rates, especially in a soft landing scenario. If rates are falling but the economy is still strong, stocks can perform well even as gold and other assets rally. Finally, this chart shows the annual total returns for various asset classes, highlighting the importance of diversifying across a variety of investment types to weather market volatility. Various asset classes, including international stocks and small caps, have contributed to broad market performance this year. This may be a surprise to many investors who worried about a recession or a market collapse less than a year ago. With events coming up such as the presidential election and the next Fed rate decision, it's important to maintain broad exposure to different asset classes. Gold's value is best realized as part of a diversified portfolio rather than a standalone investment. Gold's recent rally can be attributed to Fed rate cuts, geopolitical tension, and general investor concerns. However, it's important to focus on constructing portfolios that can withstand evolving market conditions and focus on the long term. We hope you found these high-level insights helpful. If you would like to discuss any of this further, please don't hesitate to reach out. We look forward to speaking with you soon.